When you think about it, the way we use money is always changing. We've gone from seashells and coins to paper bills and plastic cards. And right now, we are standing on the edge of the next big leap. So let's talk about the future of your wallet: central bank digital currencies. Just stop and think about that for a second. What if the cash you carry around wasn't paper, but pure data? And what if it came directly from your nation's central bank? I'm not talking about the money in your current bank account. This is something totally new. And believe me, this isn't some far-off sci-fi idea. It's a question that central banks all over the world are trying to figure out as we speak. So what exactly is a central bank digital currency, or a CBDC? Well, at its core, it's pretty simple. It's the digital version of a banknote or a coin. But here's the crucial difference. The money in your commercial bank account, that's really just a promise from that private bank to pay you. A CBDC, on the other hand, is a direct liability of the central bank itself. It's a direct claim on the ultimate source of a country's money. In other words, it's the safest form of digital money you could possibly have. Okay, but here is where it gets interesting. Not all CBDCs are the same, not by a long shot. They're actually being designed for two very different jobs. And this is probably the single most important distinction to get your head around. Let's break down the two main flavors: wholesale and retail. So on one side, you've got wholesale CBDCs. Think of these as being for the big players, the massive financial institutions. The whole point is to let them settle huge transfers between each other, basically upgrading the financial system's plumbing to make it way faster and more efficient. Then, on the other side, you have retail CBDCs. Now, this is the one that could actually end up in your digital wallet. It's for you, me, and every business out there. It's designed for everyday stuff like grabbing a coffee or paying a friend back. And the big projects you hear about, like China's ECNY or the potential digital euro, yep, those are retail. And I really want to stress this. This isn't just some academic debate happening in a couple of countries. No, this is a full-blown global movement. From Asia to Europe to the Americas, countries are deep into experimenting, running pilots, and seriously researching what a digital currency would mean for their economies. And the activity is all over the map. Literally, you've got the pioneers, right? Nigeria has already launched its e-Naira. China is running this massive pilot with its digital yuan. Then you have huge economic blocs like the Eurozone that are actively building their own versions. And of course, you've got others that are still just in the research phase, like Denmark and South Africa, or have even put a stop to further work, like the US. It just goes to show you how differently everyone is approaching this. And if you want to get a sense of the sheer scale we're talking about, just look at China. By the middle of 2024, its retail CBDC pilot had already seen 180 million individual digital wallets opened. Think about that number. This isn't some tiny test. It's a real-world stress test of digital cash being used by a huge population. So why? Why is everybody doing this? What's the big motivation here? Well, this quote from Fabio Panetta, the governor of the Bank of Italy, really nails it. He's basically saying that with private digital money and crypto on the rise, central banks have to step up and provide a secure, public digital option. It's all about making sure that central bank money, the bedrock of our financial system, doesn't get left behind in the digital age. And the ambition here goes way beyond national borders. One of the biggest potential game changers for CBDCs is fixing international payments, which, let's be honest, are notoriously slow and expensive. That's why you have these huge international efforts like Project Agora and Project Dunbar. They're trying to figure out how digital currencies from different countries can talk to each other directly, cutting out the middlemen and making everything faster and cheaper. But as you can imagine, trying to create a whole new form of money from the ground up is, well, it's incredibly complicated. Central bankers are wrestling with these massive design questions that are going to have huge effects on how this tech actually works for us. So let's get into the nitty-gritty. All right, two of the absolute most fundamental questions are all about access and limits. First, who even gets to have an account? Is it just for citizens? Can tourists use it? And second, this one is huge, is there a cap on how much digital cash you can even hold? The answers to these questions will shape everything about how useful a CBDC is and how it affects our current banking system. And different countries are thinking about this very differently, especially when it comes to non-residents. Take China's ECNY. It's explicitly designed so visitors can use it. They can open a wallet with just a foreign phone number. The proposed digital euro is also planning to give tourists access. But then you look at Japan, and they're being more cautious, saying access for non-residents is something they'll think about down the road. It really highlights that tension between making commerce easy and managing potential risks. So what about those holding limits? Why do they exist? Well, this is a really critical safeguard. The big fear is that if there was a financial crisis, everyone might freak out and pull their money from commercial banks and rush into the total safety of a CBDC. That could crash the banks we all rely on. So to prevent that, most retail CBDC designs have some kind of cap. For instance, the European Central Bank has talked about a limit around 3,000 euros, while the most basic digital wallets in China are capped at 10,000 yuan. Now, this next question, it is a huge one. It's a real tightrope walk for policymakers. How in the world do you give people a level of privacy that feels like using cash, but without creating a totally anonymous system that could be a free-for-all for money laundering and other financial crimes? The Bank of England's work on a potential digital pound is a great example of this balancing act. They've come out and said, look, neither the government nor the central bank would be able to see your personal data. But, and this is a big but, the system would not be anonymous. You'd still need to be identified to prevent crime. So how do they pull that off? They're looking at some really advanced cryptographic technologies that could, theoretically, protect your privacy while still giving legal authorities the oversight they need. Okay, here's another super practical but absolutely essential question. One of the best things about physical cash is that it just works all the time. It doesn't need electricity, doesn't need an internet connection. So if a CBDC is really going to be a true digital replacement for cash, can it match that kind of resilience? Well, to try and solve this, there was a joint experiment called Project Rosalind. The challenge was simple: figure out how to make secure payments without an internet connection. And the good news? The project actually proved that it's technically possible. They showed you can build in an offline function, which would make a digital currency so much more resilient and accessible to everyone, just like cash is today. So it seems like the tech challenges are slowly but surely being figured out. But you know what? The biggest roadblocks for CBDCs might not be about technology at all. They might be about something much older and way more complicated: the law. And the legal groundwork that needs to be laid is just immense. I mean, first, a lot of countries might have to rewrite their most basic monetary laws just to legally define what a CBDC even is. Second, for it to work internationally, you'd need a whole new rule book for how to handle disputes across borders. And third, you have to solve these incredibly complex questions around sovereign immunity, which is basically the legal shield that protects central banks when they start operating on these new global platforms. It is a massive, massive undertaking. And all of this brings us to the final and maybe the most important question hanging over this whole topic. Are CBDCs really the inevitable next step in the evolution of money, a necessary response to our digital world? Or, as some critics might argue, are they just an incredibly complex, expensive solution in search of a problem that our current payment systems already solve pretty well? Right now, the experiments are continuing, and that answer is still being written.